What's going on, guys, and welcome back to the channel. In today's video, I'll be doing a stock analysis on Amazon. I'll be breaking the stock down from their stock chart and their financials. And by the end of the video, you should have a good idea whether or not this stock should fit into your portfolio or not. And if you're new to my channel, then welcome. My name is Jason. Here, you'll find videos on personal finance, investing, and money-related topics. So if you like videos of those topics, be sure to hit the subscribe button down below and become a member of the family here. And if you're excited for today's video, be sure to hit the thumbs up button, as it does help with the YouTube algorithm and it does help support the channel as well. So sit back, relax, and let's get right into the video. Let's jump right into Amazon stock and see how they did in their most recent quarter. If we pull up Amazon's year-to-date chart, you can see here, despite going through the pandemic and still going through the pandemic, Amazon stock is up about 60% year to date. And right when the pandemic hit, you can see here that the stock did take a dive of about 22%, and it has been climbing since then. And personally, I really don't see this growth stopping anytime soon, and I'll go into details of why I think that once we cover their financials and the future of Amazon. And with the current market cap of $1.521 trillion, Amazon is sitting right below Apple and Microsoft. And currently, Amazon does have a high PE ratio of 116.61, and their EPS is currently sitting at 26.04. And although it would be nice, but currently Amazon does not pay out a dividend, and that is because they're investing all of their money back into the business. And if they were to pay out a dividend, that would kind of distract them to grow their business further. And if you look at Amazon's profit margin, right now it's at 4.99%, which is considered very low. And that's obviously because this company always reinvests back into the business, making it grow further and further. And if we quickly take a look at Amazon's earnings, you can see here, just this past Thursday, their Q3 financials came out and they actually beat their target. And if you take a look at the annual financials, you can see here, year over year, they've been killing it with their revenues. And if we switch over to their quarterly financials, in Q1 of 2020, seeing them go from about $75 billion in revenue to about $95 billion in revenue in Q3. Now that's pretty outstanding, considering that the situation that we're currently in with the whole pandemic still going on, and yet Amazon has continued to push forward. And if you take a look at the recommended rating from the analysts, currently it's sitting at 1.7, which is closer to the strong buy. And you would think to yourself, a company with a stock price of over $3,000 per share is considered a strong buy. And I'll back up that claim later on in the video by showing you what this company is all about and what their future plans are. And currently, the analyst price targets for Amazon is currently sitting at $3,700, whereas the price currently is a little over $3,000. So will their stock actually hit a little over $3,700 per share? Well, we'll just have to wait and find out and how everything turns out. But the way that this company is moving, I have no doubt in my mind that they will reach that goal. And now let's dive even deeper into Amazon by taking a look at their Q3 earnings release. So I'll quickly go over some important numbers and then dive deeper into why they've increased. Amazon's operating cash flow has increased 56% to $55.3 billion for the trailing 12 months. And this is compared to the trailing 12 month that ended September 30th of 2019, which was at $35.3 billion. And their free cash flow has increased to $29.5 billion. And compared to September 30th of 2019, it was sitting at $23.5 billion. Looking at Amazon's net sales, which increased by 37% to $96.1 billion in the third quarter, and comparing that to the third quarter in 2019, which it was at $70 billion, this is a huge jump in their net sales. Their operating income has also increased to $6.2 billion in the third quarter, and comparing that to the 2019 third quarter, which it was at $3.2 billion. And not surprising at all, Amazon's net income has increased as well to $6.3 billion in this third quarter, compared to the third quarter in 2019, where it was $2.1 billion. Let's pull up their cash flow statements and take a look at their net income. And rather than looking at it from a 3-month point, we'll look at it from a 9-month and a 12-month point. So let's start off at the 12-month period. If you see here, in 2019, they were sitting at $11.3 billion in net income. And if you compare that to 2020, look how much it has increased. And if we compare the net income in 2020, you can see that they've jumped up quite a bit to $17.3 billion.
Even comparing Amazon's 9-month from 2019 to 2020, you can see that substantial jump that they made. And that's obviously due to a lot of factors which I'll get into shortly. And pulling up Amazon's consolidated statements of operations section, just looking at these numbers, it just boggles your mind on how crazy this company has been moving despite being in the pandemic that we're in right now. Because if you compare the 3-month and the 9-month from 2019 and 2020, you can see those crazy jumps in their net product sales and the net service sales. For example, their net product sales from 2019 on a 3-month period went from $39.7 billion to over $52 billion in 2020. And if you extend that out to the 9-month, look how big of a gap that is compared to a 2019 and a 2020. If we move down to their operating expenses and take a look at their fulfillment section, you can see here that that's one of the things that has been increasing, whether it be through the 3-month period or the 9-month period compared to 2019 and 2020. And this, of course, is a result of Amazon hiring their own delivery people to get their products out to you, which is completely normal because as the company grows, they need more and more manpower in order to get those shipments out to the customers as soon as possible. And over their technology and content, marketing, and general and administrative expenses, it hasn't moved as much. And just overall, this company has just been showing really great numbers. And if we take a look how Amazon did in each of their segments, you can see here again, they're showing pretty impressive numbers. If we take a look at North America, you can see that their net sales have been increasing steadily. But the most interesting one is if you take a look at the international section, in 2019, they were actually losing money. And seeing them come out of that in 2020 is very impressive. And moving forward into the future, these numbers will obviously steadily grow. And that just shows how great of a company that Amazon is. Because from 2019 having over $1 billion in loss, and then coming out in 2020 with $355 million in profit, which doesn't seem like a lot, but they're not negative anymore. And their AWS section has been doing great as well. And moving on to Amazon's consolidated balance sheets, looking at their cash and cash equivalents, you can see here from December 31st of 2019 to September 30th of 2020, there has been a decrease, but that is obviously for a good reason, because looking at their property and equipment, that has increased. So you can obviously see that this company is putting back money into the business and trying to grow it further, which you want to have in a company rather than it paying dividends, because that's really not going to do well for the company. It may do well for the investor itself, but if you want that real growth from a company, they have to invest those revenues back into the company. And with getting new buildings, you can see Amazon's long-term lease liabilities and long-term debt has increased as well. But again, to me, that's completely normal. So by looking at Amazon as a whole company and looking at their balance sheets, what does this mean for the future of Amazon? Well, they've got their hands in artificial intelligence, business and cloud services, clothing and accessories, financial services, food, beverage and consumer products, hardware, home services, media production and entertainment, publishing, social commerce and networks, and the list just goes on and on. This company is so well diversified in every other segment that overall Amazon will continue to flourish in my opinion, and I have no doubt in my mind that this company will become even more valuable in the future. So to end this video off, in my opinion, Amazon as a whole company is amazing. They do a lot of stuff and they do it really, really well. But despite having the share price over $3,000, I think that is a little too steep when it comes to actually going in and investing into this company. I would love to see the share price drop a little bit so I can actually buy some shares of Amazon, because I've been waiting pretty long. But the way that this company's financials are moving, I don't know if that will even happen. 5, 10, 15 years down the road, this company, whether you get it now or in the future, if the price does drop, it will be a great investment to have in your portfolio.
And just like that, guys, that is the end of today's video. If you've made it this far, then thank you for watching all the way through, and be sure to hit the subscribe button down below and hit the like button, as it does help out with the YouTube algorithm and it does help to grow the channel as well. And just like that, guys, I will see you on the next video.